All right, we're back on the Half. Goldman Sachs, the price target today raised to $420 by noted analyst Mike Mayo. He says Goldman's undervalued relative to its peers. It's one of our calls of the day. Jimmy, you own Goldman Sachs. It's had a nice little move year to date, up about 10% or so.
Yeah, it's had kind of a stealthy move. Remember that bad earnings report that it had and the embarrassment, frankly, of Morgan Stanley absolutely crushing it the day later, or maybe it was the same day. But the stock's coming back. Now, what is that saying? Mr. Mayo, who we all know, thinks that it's cheap, and it is cheap. But I don't think you can get into this just because it's cheap. I think you have to expect that if you believe, like me, the economy's doing better than expected, that the deal calendar is going to pick up, that there's going to be M&A activity, that there's going to be security issuance, which has basically been dead for all of these companies. I think that's what the price movement is reflecting. If somebody says it's reflecting the cost cuts that were done in the fourth quarter, I'd say that's kind of wishful thinking that all of that effect is going to be done in one quarter. But it's a high-quality company in a space I want to be in at an attractive price.
I'd rather pay a little bit of a higher premium to be in Morgan Stanley.
I gotcha.
I like the wealth management. I like the acquisition of E-Trade, Eaton Vance. And there's not that exposure that exists with Goldman Sachs with that little entree into consumer banking. I think they lost their identity by doing that.
All right. Sherwin-Williams downgraded today at KeyBank sector weight from overweight. Carrie, you own this?
Yeah. So Sherman hitting a bit by a road bump, and this quarter is going to be tough. We think next quarter will start to improve, particularly because interest rates are coming down. Mortgages are going to be less expensive, and that's been a factor with new home sales and people spending money on large renovations. But we think it's a great company, and we believe that we'll see an improvement over the second half of the year.
Jimmy, I mean, as long as housing's in the penalty box, this stock's not going to work, is it?
Yeah, but what if we're actually seeing some green shoots in housing?
Yeah.
I mean, that's why I'm sticking with a small position here. That's why I'm sticking with Home Depot.
Stock's not anticipating the green shoots, not seeing the ones you are, right?
Well, it will.
The stock is not. You are correct. That said, mortgage rates, 30-year mortgage rates are down more than 1% from the not all-time high, from the recent high. And look, employment is still strong. People are still in need of housing. So you put this all together, and those green shoots should take hold.
All right, Cisco today, tactical outperform list, Evercore ISI. They say, quote, they're poised for a strong quarter. Target 58, you own it, Cisco.
They've had a few good quarters now, and what the few good quarters in a row have said is that enterprise spending is hanging in there. Now, they have not been given the benefit of the doubt in that regard, and in part it's because, and I'm looking at you, Carrie, companies like Salesforce have given an alternate view on enterprise spending. But again, in terms of the hardware and software that Cisco provides, they've had a few quarters here where demand has been good, supply chains have unraveled, and I think that just continues.
Again, stock's done nothing this year as tech has had a nice move.
Yeah, but it didn't get
Didn't do anything last year either, and it should have.
This is a lower beta name. Go ahead, Joe. But remember, it's lower beta.
Yeah, but lower beta tech did well.
Yeah,
isn't that the whole point?
Well,
last year
we're talking about.
Yeah,
but it didn't do anything last year.
Well, it didn't go down like the rest of the tech market did. Listen, here's the thing about Cisco. Let me make this point because I make it every time, okay? If you've held this for 10 years as I have, okay, this stock tracks the S&P 500 to get a little bit more return from the dividend. Here's the thing. You don't have the drama of Apple and what's going on with China or what we're seeing with Google today. You just don't have that with Cisco. It's a low
I'd take
drama.
10 years of Apple over 10 years of Cisco, sorry.
It was 57.
Well,
it was 57 back.
You can do that. Guys, 10 years of this outperforming on a total return, the S&P 500, it's doing what I want.
But last year is the exact environment where Cisco should have worked. It was 57 back in February. It was 38 in October.
Now's your opportunity, Joe.
Okay.
Now's your opportunity. I want you to mark it on close Cisco for Joe.
China's been a big deal, right? Supply chain's been a big deal. And once that, we think, has been settled, we'll see if
Stock's in the same place it was in 2018.
Mark it on close for Joe T.
No.
All right, American Express upgraded to overweight at Morgan Stanley. Carrie, you got it. AXP.
Yeah, love American Express. I mean, 30% of the new spending was millennials and Gen Z. They're getting the benefit of higher interest rates. People are traveling. There's more business travel, more tourist travel. That's good for American Express. It's really a well-run company, and the stock is at a reasonable multiple. So we like it for many reasons and think it has more to go.
Joey, Tractor Supply. It seems odd that I'm going to you and not Jim on Tractor Supply, but he doesn't own it anymore, and you do. Initiated overweight, Barclays 254. is the PT?
It's
on
been
it?
a position in Joe T since inception, never left. There's only 10 names left that can make that claim. It's a company with a fantastic balance sheet that's navigated the environment. Management has done all of the right things that you want to see done with the balance sheet, maintained strong positive momentum, and its customer retention is remarkably strong.
What's the matter with you? How can you be Farmer Jim and not own Tractor Supply?
That's
like the greatest disconnect ever.
I have an identity crisis. I've got people in my firm who are kicking me in the behind on this one, and it may reappear.
Okay.
It may reappear.
All right, you let us know. No pressure, obviously.
Yeah.
Don't investing on peer pressure is not good.
No. But I've got a team of talented individuals who are pinging me on this.
Okay, Delta upgraded to buy it. Redburn, $55 is the price target. There it is at 39. Jimmy, you own this.
Yeah, it's a fabulous airline. The question is, do you want to own airlines? Do you want to own a fabulous airline like Delta at 7.7 times this year's earnings, below 6 times next year's earnings? You do if you believe that we're not going to have a recession, as I believe. If you believe we're going to have a recession, you don't own airlines. But look at TSA traveler counts. They're well above 2019 levels. You look at what Mr. Bastian and other in the industry are saying, and demand is very, very strong. Yeah.